Well, America's largest banks are beginning to prepare for a shallow recession this year, with major lenders tightening up their loan books. Joining me now is our business reporter, Edward Boyd. Ed, this doesn't sound great. It is profit reporting season in the US, and it's becoming clear the major banks are pretty worried about a looming recession.
Yeah, so the major banks in America reported on Friday America time, Saturday in Australia, and the big flavour from all of their results was they're getting ready for a shallow recession to hit the United States. So what does that mean? Well, they're tightening up their loan books. They're not lending out as much credit as they did in the past. They're also reporting signs that more Americans are using their credit cards to pay for bills. They've also talked about how there are mass layoffs across the technology sector in the United States, and big layoffs is a sign of a looming recession. So that was the general sort of theme from these big banks that reported. JP Morgan and Citigroup, they're in the top 10 largest banks in the world. They are expecting a recession later this year, and their chief executives did speak about it over the weekend. But the market reaction to this news was actually pretty positive, because the banks are all bouncing back from a poorer result in the previous quarter. So share prices from all the big American banks went up over the weekend, and that's actually helped our market this morning. So it's up about 0.3% in early trade. And the Aussie bank sector is going to be the one to watch today, because investors were kind of worried about these big bank collapses. Silicon Valley Bank in America went under, and First Republic, and now the bank sector's sort of come about a month later and said our results are actually pretty good. We are expecting a recession, but fundamentally our loan books are still strong. So investors are happy, and our market's up as well off the back of it.
Okay, well, this week we're going to see some more key economic news. Out tomorrow, the RBA minutes are being released.
These are big, Laura, because this is from when the RBA kept the cash rate on hold. Quite a few economists thought the cash rate needed to go up one more notch this month to 3.85%. Instead, the RBA hit the pause button, the first major central bank around the world to pause interest rates. Other banks are still raising interest rates. They're still in the middle of their rate tightening cycle. They're coming to the end of it, but the Reserve Bank this month, they kept rates on pause. So we're actually going to get the minutes from that board meeting. So quite detailed minutes, which will explain the reasoning behind why we paused interest rates this month. A lot of people still expect the RBA may need to raise rates one time or two more times this year. Obviously, we've got federal budget coming up in May. There'll be a cash rate decision just a week before that. So that's definitely the one to watch over the next couple of weeks.
Yeah, sounds like it. Ed, thanks so much.
Thanks, Laura.